Hi, welcome back, or hello if it's your first time. I'm Stephanie Weeks, and today we're going to talk about mortgage terminology. So I will drop a link to a cheat sheet so you've got this to reference for the future. But this is very important information that you really want to know if you're looking to become a homeowner. So we're going to go through all this today, and let's get started right now. I'm Stephanie Weeks, and I've been helping thousands and thousands of people with their mortgage financing for over 18 years. So this is why you should listen to me. This is why you should stay tuned to the end of the video. And I want to say thank you so much for tuning in. All right, so we've got our mortgage terminology cheat sheet we're going to go through. We're going to go through one at a time. We're going to go through alphabetical. We're going to go in alphabetical order. All right, so this is because I really want you to kind of understand the basic terminology when it comes to mortgages, like I said, in becoming a first-time home buyer or becoming a home buyer. And you're going to hear a lot of things that are kind of thrown at you, and you're going to be like, wait, what? And you have to research it. But with this video and this cheat sheet, you're going to be right ahead of the curve. First thing is amortization. So the official definition, and that's what I'm going to go with today, is the official definitions. Amortization is the process of paying off debt with regular payments made over time. The fixed payments cover both the principal and the interest on the account, with the interest charges becoming smaller and smaller over the payment schedule. So you'll notice if you buy a house, and let's say you sell it in like 2 years. That's when I sold my first house, after 2 years. And I was like, wait, I owe what? I've been paying on this mortgage for 2 years and I've paid down like nothing. And that's because the interest is front loaded when we're dealing with mortgages. All right, next we have appraiser, one who was trained in the methods of determining the appraised value of the property. You will pay a fee for an appraisal report containing an opinion as to the value of your property and the reason leading to this opinion. So they're going to give us the sales comparison approach to make sure that you are paying within the bracketed range of the sales in the area. So like, let's just say that your house is $310,000. The houses in the area have sold from $275 to $350. Then the appraised value is going to end up being that $310 because it falls within the bracketed range of the sales, and the sales price is what someone is willing to pay. And as long as that's substantiated by those comps, that's why most of the time your appraisal comes in at sales price, which confuses everybody. Next, you've got closing costs. The closing cost is costs that the borrower pay at the time of the closing. In addition to the down payment, these typically include lender, appraiser, title company, and clerk of court. Couldn't have said it better myself because it's exactly how I describe it. Then you've got credit report fee. Credit report is a fee that covers the cost of the credit report that shows your credit history. The lender uses this information in the credit report to assess your credit worthiness. We call that, what do we call that? Likeliness to repay, basically. Now we've got delinquency. Failure of a borrower to make timely mortgage payments under the loan agreement, that will make you delinquent. We've got earnest money deposit. Sometimes we'll call it as a lender EMD or good faith. Earnest money deposit is money you pay to show you're serious about purchasing the home. Often it becomes part of the down payment if the offer is accepted. It's returned if the offer is rejected, or may be forfeited if you do not follow through with the deal. Escrow account. An impound account in which a portion of your monthly mortgage payment is deposited to cover annual charges for home insurance, mortgage insurance, and property taxes. So a lot of people get confused and think they are financing their escrow. They are not. You're financing and repaying your principal and interest, and then escrow is added to the monthly payment that you make, but it's held separately. You've got the escrow account and then the principal and interest repayment. So don't get confused on that. So then we have got equity, the difference between the value of the home and the balance of the outstanding mortgage loans on the home. That's what we consider equity. Flood certification fee, part of the closing cost, and this is a fee for the assessment of your property to determine if it's located in a flood-prone area. Foreclosure is a legal process in which mortgaged property is sold to pay the loan. Government recording and transfer fees. For legally recording your deed and mortgage, these fees may be paid by you, or sometimes you can negotiate and ask the seller to pay this fee for you. Home inspection. An inspection of the mechanical, electrical, and structural aspects of your home. You will pay a fee for this inspection, and the inspector will provide a written report evaluating the condition of the home. Now, this is very important to note. It's different than the appraisal. An inspection is not required by the lender, but I always, absolutely, 100% suggest that you get it. Homeowners insurance or hazard insurance.
An insurance policy that protects your home and your possessions inside the home from serious loss, such as theft or fire. The insurance usually is required by all lenders to protect their investment and must be obtained before the closing of your loan. Interest, a fee charged by the lender for the use of its money. Now, before I move on, again, I'm Stephanie Weeks. I've been helping people with mortgages for over 18 years. Please be sure to subscribe to the channel, hit that bell to be notified every time I drop a new video, which is at least a couple of them a week. And please share these videos with your friends and family. My mission is to provide mortgage peace and help more people become homeowners. Interest, a fee charged by the lender for the use of its money. Interest rate, a charge by the lender for borrowing money and is expressed as a percentage. Loan to value ratio, we call it LTV. A percentage calculated by dividing the amount of the borrowed by the price or the appraised value of the home, whichever is less. LTV is the ratio used to qualify borrowers for a mortgage. The higher the ratio, the tighter the qualification guidelines for certain mortgage programs. Low ratios below 80 carry lower rates because it's a lower risk to the lender. Origination fee is a fee charged to the borrower for the origination of the loan. It's paid to the lender. Origination services. Any service involved in the creation of a mortgage loan, including but not limited to the taking of the loan application, the loan processing, the underwriting and funding of the loan, and the processing and administrative services required to perform these functions. There are so many people involved in the closing of a mortgage loan, and they are so expensive to close. PITI. PITI, yes, PITI, principal, interest, taxes, and insurances. That's your payment, which is principal and interest, right? And then your escrow, which is taxes and insurances. So we call that PITI. Pest inspection. This is an inspection done on the home to make sure that there are no pests. That could be like bees or hornets or termites and different things in different areas, but it shows that the home is free from infestation. Points, also known as discount points. This is an amount of money paid to lower the interest rate or buy down your interest rate on a mortgage loan. Prepaid items. Lenders often require the prepayment of such items such as home insurance, PMI, real estate taxes, and things like that, right? You're also going to pay some daily interest when you go to closing as well. That is separate from closing costs. You got closing costs and you've got prepaid items added together with your down payment, if any, and that equals total cash to close. Pre-approval. This is a very, very common question. Here is the official definition. Pre-approval, a commitment by a lender to make a mortgage to a specified borrower prior to the identification of a specified property is designed to make it easier to shop for a home and help to get your offer approved or accepted. Prepayment penalty is a penalty assessed on some loans, so make sure you're not getting that causes you to pay a hefty fee or penalty if you prepay the loan within a certain period of time. Basically meaning that the lender hasn't been able to make their money back yet or enough money to break even, and so they're going to charge you a fee if you pay off too early. PMI, private mortgage insurance, not to be confused with MIP. PMI is associated with like conventional loans. MIP is government-backed loans, mortgage insurance, not to confuse the two. But PMI is an insurance that has no protection to you. It protects the lender in case you default on the loan. It's going to be higher the lesser down payment that you put. And if you put down 20% on a conventional loan, you will have no PMI whatsoever. We call that having enough skin in the game. Recording and transfer fees. These charges include fees paid to a local government for filing official records of a real estate transaction. A refinance. A refinance is paying off an old loan while simultaneously getting a new loan. This may be done to lower your interest rate, to shorten your term, to increase your term, to take cash out, things like that. Sales agreement. This is a contract signed by a buyer and seller stating the terms and conditions under which the property will be sold. It may also be called an agreement of sale or purchase contract. And what a lot of people don't realize is when you complete that, you're also choosing your closing date. And so many people miss that point when they are making these offers and having them accepted. Settlement. Settlement is the time at which the property is formally sold and transferred from the seller to the buyer. At this time, the borrower takes on the loan obligation, pays all closing costs, and receives clear title from the seller. Settlement or closing agent. In some states, a settlement agent or closing agent handles a real estate transaction when you buy or sell a home. It also may be an attorney or a title agent. He or she oversees all the legal documents, fee payments, and other details transferring the property to ensure all the conditions of the contract have been met and the appropriate real estate taxes have been paid and prorated. Getting down to the end here, we've got a survey fee, obtaining a drawing of your property showing the location of the lot, any structures, and any encroachments. This is usually paid by the buyer. Tax certificate. Official proof of payment taxes are due provided at the time of the tax transfer of the property, titled by the state or local government. Tax service fee. This fee covers the cost of your lender engaging a third party to monitor and handle the payment of your property taxes. This is done to ensure that your tax payments are made on time to prevent any liens from occurring, because what most people don't realize is a tax lien comes before a mortgage lien. Title service fees. The service fees include charges for the title search and title insurance if required. This fee also includes the services of a title agent, settlement agent, or attorney. Title insurance. Insurance that protects your lender against any title dispute that may arise over your property. Though a title search is done and the lender verifies who has owned the property, usually within the last 24 months, they also verify the property is free of liens. The title company then issues this insurance to make sure that nothing was missed, overlooked, may be valid but not filed, so on and so forth. So we're going to stop there, and that was title insurance. And as always, thank you so much for tuning in. I know this was a long one, but it's a really good one. Don't forget, I've got the cheat sheet link in the bottom, in the description below, so that you'll have this for future reference to help you be really knowledgeable and apply that knowledge to become a homeowner. So happy home ownership to you. Please do comment below, I love this video or I hate this video. Let me know what you're thinking. And I look forward to seeing you in the next one.
Thank you so much for tuning in. You can reach us at weeksteam.com or 985-300-LOAN if you want to refer us to anyone else that needs help with any type of mortgage financing.